All right, good morning, ladies and gentlemen. I'm going to talk about two companies in 10 minutes, so it's going to be fast and furious. I call it the two yellow metals. As an entrepreneur, I'm the founder and CEO of Uranium Energy Corp. That's the first yellow metal. And I'm also the founder and chairman of Gold Mining Inc. That's the second yellow metal. We're going to start with uranium. Standard disclaimer statement. Big news in the sector and why it's so timely to look at the uranium sector right now. 2 weeks ago, McArthur River, the world's largest uranium mine, is being shut down. That's 10% of global production of uranium. It's what the sector really needed to see, really an acceleration in the recovery of the uranium price. Uranium prices are up over 20% in the last 2 weeks. Uranium equities are all responding extremely well, up 30 to 40% on average. Uranium Energy Corp, our company, is focused on low-cost in-situ recovery. In-situ recovery is responsible for 40% of global production. We have a fairly diversified portfolio. 99 million pounds of uranium in the ground, 43101, mainly in the US. 70 million pounds of vanadium as a byproduct of some of our uranium projects in Colorado and Arizona. And we also have the world's largest, highest grade titanium deposit in Paraguay, 4.9 billion tons of 7% titanium near surface. That's a project we plan to spin out next year, and it was part of our strategy in Paraguay as we've been acquiring assets there over the last 5 years. Our focus in the US is also key. Within the nuclear story today, there's really a story within a story with the US. The current US administration is pushing for more domestic production of uranium in the US. The US is importing 96% of its uranium requirements. We're a US company with 4 million pounds of annual production permitted or built. We have our Hobson processing plant, which you see here. This is really the key to what facilitates our production readiness. We have the former U.S. Energy Secretary, Spencer Abraham, that's him being sworn in the Oval Office. He was in the George W. Bush administration. We have the right people, we have the right infrastructure, and we really have what it takes to become a low-cost U.S. producer. Just this morning, we'll be announcing before market open a new 43101 report on our Burke Hollow project in South Texas. This is an in-situ recovery project that we drilled 130 holes at this year. It's permitted for production, and it's about 50 miles from our Hobson processing plant. So look out for that news. And here's just an overview of our titanium project in Paraguay. As I mentioned, 4.9 billion tons of titanium oxide at about 7.4% grade, and also a pilot plant that was developed to test the material and the titanium concentrate that was produced there. We have about 190 million market cap, 150 million shares out, 22 million of cash. BlackRock, JP Morgan, Fidelity, Li Ka-shing are the largest shareholders. Management is 15%. We own, and we're covered by about 5 analysts. We're listed in the US. We trade about 3 million shares a day. Timing is everything right now with uranium. Sector's been beaten up for the last 6 years. And for us, it's the infrastructure advantage, and it's our production readiness. We don't need to raise hundreds of millions of dollars to get into production. We already produced. We put the production on hold because of the low uranium price, and we can get back into production very quickly. It's US production, and we can go up to 4 million pounds per year based on our current permitted capacity. Next, yellow metal, gold mining. Website is goldmining.com. Our ticker is gold on the TSX Venture. We're a consolidation story. So far, we've consolidated 19 million ounces of gold resources, 2 billion pounds of copper, 24 million ounces of gold equivalent resources. Insiders own 25%, 15 million of cash, no debt. If you like uranium, we have a uranium joint venture with Areva. We own 75% of a project called Rhea in Western Athabasca Basin in the same neck of the woods that Dev was just talking about. We've made 2 acquisitions in the last 4 months. Those projects are not included in our 19 million ounces of gold resources. Both we expect to have resources added to our portfolio. We're in the US, Canada, Brazil, and Colombia, and we've recently entered Peru. About half of our projects are orogenic type deposits, grades ranging from 1 to 1.5 gram per ton gold, and the other half are gold copper porphyries with grades ranging from 0.6 to 0.8 gram per ton gold equivalent. We're as much focused on acquisitions because we believe right now during the bear market that we're still in, sub $1,300 gold, we're a buyer. Above $1,300 gold, we have a very exciting pipeline of projects that we plan to drill, develop, and take to production. You can see in the last 6 years, as the market has continued to be in a downturn, we've been an aggressive buyer of projects and have continued to acquire projects. Again, today we're at about 24 million ounces of gold equivalent resources. That doesn't include our last 2 acquisitions. We've spent about $68 million on our last 6 acquisitions. The assets and companies that we've acquired had a historic market cap of over $800 million. Historic is in the context of the last 5 or 6 years. So again, you can see the whole concept of buying for cents on the dollar is totally at play here with how we've been buying. Typically, most of our acquisitions have happened at about $1,200 gold, $2 copper, and of course today gold is inching higher and copper prices are inching higher. So today, when you look at our company, we have 134 million shares out. Again, no debt. We trade about 400,000 shares a day. We're covered by 3 analysts. IM Gold, Sprott, KCR Fund, Brazil Invest are our largest shareholders. Brazil Invest is the largest investment house in South America. They've invested about $15 billion in Brazil and Colombia in building projects. So great long-term investors to have. The chairman and founder of Brazil Invest sits on our board of directors, so we have a strategic partner in Brazil. Our lead project, San Jorge, which is a near-term production project, is an open-pittable resource with a grade of about 1.54 gram per ton. And a PEA that was done in 2013 shows that at $1,300 gold with $120 million upfront capex, we have an IRR of 36% and $290 million NPV. Current market cap is half of that NPV. This is one of only 6 projects representing only 10% of our total gold resources. So in terms of near-term production and focus, San Jorge would be one of those. In terms of our more immediate focus, again, we're working on more acquisitions in the next 3 months. You'll see 2 new 43-101 reports come out, which we've already paid for, meaning these are acquisitions we've already completed. We're reassessing 181,000 meters of diamond drilling in Colombia between 2 acquisitions we've made there in the last year. We have a TSX listing coming up. We're uplisting from the TSX Venture to the TSX. We'll continue to be under the ticker symbol GOLD. And as we continue to grow, we're really able to fund everything that we're doing for the next 2.5 to 3 years. The cash on hand gives the company very strong staying power, and that's key. We're trading currently at about $7 an ounce in the ground for 19 to 20 million ounces of gold. It's a fairly attractive valuation. 3 analysts agree, and 3 analysts have buy ratings with target prices north of $4. Stock is trading at about $1.40 right now. Thank you very much.